let's get right into it. Let's take a look at some of these stocks. So what I want to do is bring up Microsoft. Look at Microsoft's bull run here. We have a move up on Microsoft, which is basically taking it back to all-time highs. What we can see here, guys, is again, you have a double top coming into play. Double top on Microsoft right there. That's at an approximate price of 366. So 366 here is going to be a double top. All right, double top. All right, and again, that should be resistance. In addition, I want to draw your attention to this. The stock itself has made a run from basically $325 all the way to $300 and almost $65. That is a massive move in market cap. And again, we're not talking about a $100 billion company here. We're not talking even about a $500 billion company. This is a $2 trillion market cap company. To gain this percentage, this is basically, we're talking about over 10% in a matter of a week and a half. That is unbelievable. You have to go back many, many years to find this type of price action in these bigger names. So let's take a look at some of these other big names out there. Let's take a look at Amazon. Amazon, we know Amazon had good earnings. The stock initially was falling into earnings, then had this huge move up. Yesterday, it finally had a little bit of a down day. And again, it did come into some resistance right here. There's a down-sloping trend line. Let me just move out here. What we can see again on this chart is this down-sloping trend line area. If we go back to this pivot high back here, and we connect it through this pivot high, that's where we are right now. Now, honestly, could it go a little bit higher? Yeah, you see this white trend line right here? It could end up getting to that level. It's not very much higher, but you are into a lot of resistance on the charts. Now, let's keep going. What about Apple? Let's see what Apple has in store for us here. Now, Apple's had a remarkable move on the chart. It broke out of a down-sloping channel with multiple weeks of up moves here. Another remarkable move in an otherwise, kind of crazy up move market, right? We've seen a market that all of a sudden is saying, wow, the Fed is done. They're not cutting yet, but the market is preemptively rallying on hopes that the Fed will loosen monetary policy. And again, we've had this huge move up on Apple. We're talking about a level here, which was around 165, and it's now trading at 183. And again, folks, that is a basically 10% move on a $3 trillion company. $300 billion created, poof, out of thin air. Now, what's fascinating about this is that you talk about a Federal Reserve that is trying to reduce money in the system. Well, what we're basically looking at here is essential quantitative easing. It's essentially money printing. And I know that may be a foreign thought to you guys because you're saying, well, the stock market's going up. The Fed's not really printing money. But in essence, when you create $300 billion in a week and a half on this stock and you do $100 billion or $200 billion on Microsoft and on Amazon $100 billion and you do this, essentially you're creating from what people had a couple weeks ago. Their portfolios are now up massively. And the wealth effect can then start adding to inflation pressures. Because when people look at their 401ks and they say, wow, 2 weeks ago I had 100K, now I have 115K. You know what? Maybe I will go buy that new TV. Maybe I will take that vacation. I feel richer. And the more demand you have for goods, the more the price may adjust upwards to meet that additional demand. And that's how we get inflation. So it's just interesting to note here how we have stocks that are ripping. Again, I'm talking mainly about the mega cap tech here. But with the mega cap tech ripping, they're putting a lot more money into the economic system here in the U.S. than there was before.